A typical millionaire diversifies their income across approximately 7 different sources. In contrast, most individuals depend solely on their job for income, making them vulnerable to financial instability. By examining the habits of millionaires, we can see a pattern of multiple income streams. However, not all income is the same. It varies in terms of activity level, passivity, taxation, and leverage potential. In this video, we'll explore the 7 main ways most millionaires earn money. Before we begin, please give the video a thumbs up and consider subscribing to our channel so you won't miss out on more awesome content like this. Let's get started. The first and most common source of income is earned income. This category includes money earned from jobs, encompassing everyone from regular workers to top executives like CEOs. Even many CEOs remain employees of their respective companies. Professionals such as doctors and nurses also fall into this classification. Earned income is obtained by exchanging time for money, commonly referred to as active income. This category may also include freelancers. For many self-made millionaires, earned income serves as the initial stepping stone. It's where most people start and can be a solid foundation, especially if it supports oneself and their family. However, relying solely on this type of income is risky because it means trading time for money, which is inherently limited to 24 hours in a day like everyone else. This limitation caps potential earnings in this category. Additionally, earned income is subject to high taxation rates, sometimes reaching up to 40% of earnings depending on income levels. While it's a commendable starting point, it's crucial to explore other available income avenues. The second stream of income is profit income. Profit income is money earned from selling something for more than it cost to make or purchase. For example, when a grocery store sells items at a higher price than the purchase cost, they're earning profit income. Similarly, a car dealer makes money by selling cars for more than their purchase price, as well as through loans and maintenance services. Earning profit income typically requires significant effort initially, as it usually involves starting a business. People relying on earned income often struggle to transition to earning profit income, as it requires courage and investment of both time and capital. Additionally, it might demand an uncomfortable amount of time away from their earned income job to start a new venture. To become an entrepreneur and rake in profits, you need to choose a product or service to sell, ideally something you are passionate about, such as cars, clothing, or even opening a restaurant. By presenting the product well and treating customers excellently, profit income can be financially very rewarding. The third income is interest income. Interest income is as simple as lending your money to someone for a fee. The interest received depends on the loan duration and the purpose of the loan. However, it's generally not advisable to lend money to friends or acquaintances. Instead, interest income is commonly acquired through safer investment avenues, such as depositing funds in a bank FD, investing in corporate bonds, or purchasing treasury bills. While these methods offer stability, they often yield modest returns, typically ranging between 1% to 4% annually. A payday loan company earns money by lending to individuals, expecting repayment upon the borrower's next paycheck. This type of income can be completely passive once arranged, requiring no effort beyond acquiring the initial capital. However, the amount you can earn is limited to the available funds to lend and what the borrower is willing to pay in interest charges. The fourth one is the dividend income. Dividend income comes from investments in stocks that distribute a portion of their earnings to shareholders. When you purchase stock in a company, you become a shareholder. Periodically, usually quarterly, the company distributes a portion of its profits to shareholders as dividends. As a shareholder, you have partial ownership in the company, entitling you to a share of its profits. The tax rate on dividend income varies depending on its classification. Qualified dividends may be subject to a lower tax rate. Individuals with substantial investments often achieve financial independence by relying solely on these dividend payments, perpetuating wealth accumulation. In essence, while the investment principal grows, investors receive ongoing cash flow. Many retirees opt to live off their dividend payments, provided they have sufficient investments to cover their monthly expenses. The fifth one is rental income. Income generated from renting out property typically involves leasing houses or apartments to tenants in exchange for monthly payments. However, real estate assets for rental purposes can also include industrial spaces, warehouses, storage trailers, and land leased at shopping centers, all of which often entail monthly rental payments. Many retail stores, for example, prefer renting space rather than owning property to focus more on their core products and services rather than managing property-related tasks such as maintenance, repairs, and bookkeeping. There's a wide variety of assets that can generate rental income beyond residential properties, including boats, campers, cars, tools, and virtually any type of real estate. To earn profit from rental income, the money received must cover the property or item's expenses and ideally provide additional funds, known as cash flow. The sixth one is income from capital gains. Capital gains income occurs when an asset that has increased in value is sold. While real estate and stocks are commonly cited examples, various other assets can also yield capital gains. For instance, purchasing a property for $150,000 and selling it for $250,000 would result in a capital gain of $100,000. Similarly, acquiring $100 shares of a company at $10 each and selling them at $120 each would yield a capital gain of $110 per share. It's important to differentiate capital gains income from profit income. Unlike profit income, which involves buying and selling goods for a profit, capital gains stem from assets that have appreciated in market value over time. While individuals have limited control over this value increase, capital gains generally benefit from favorable tax treatment compared to most other types of income. Capital gains tax rates typically range from 15% to 20%, with the possibility of reducing to 0%, especially in real estate transactions. In many instances, reinvesting capital gains from real estate back into the market can facilitate tax-free growth, thereby enabling individuals to enhance their net worth without incurring additional taxes. The seventh one is royalty income. This type of income is about continuing to receive payments even after the initial work is completed. It can come from various sources such as appearing in a movie that continues to be watched, writing a book that remains popular, or nowadays, running a YouTube channel that retains viewership. Royalty income represents a form of residual income earned by allowing others to use one's ideas or properties for profit. For example, musicians earn royalties when streaming services and recording labels distribute and sell their music. Similarly, authors receive royalties from publishing companies for printing and distributing their books, earning income as long as sales continue. Royalty fees and payment terms can be structured in various ways. In franchise agreements, such as with fast food restaurants, royalties are often set as either a fixed or variable percentage of gross sales, with a minimum royalty requirement in many cases. Royalties serve as an excellent income source for creators or owners of products or services who capitalize on their intellectual property. I hope you find value in this video. If you learned something, share it with friends and family, it could be life-changing for them too. Your likes and comments are deeply appreciated, as they help the video reach more people. Subscribe to the channel and turn on notifications so that you don't miss any future videos. Thank you for watching and I'll see you in the next one.